This webinar brought to you by FX Street. This is high probability trading strategies, entries, and exits. My name is James Chen. I am the Chief Technical Strategist at CITYINDEX Group. Today is my monthly webinar on FX Street. I've been taking a little bit of a hiatus, but I'm back now, so hopefully we're going to be going forward with these monthly webinars. Now, today I'm going to be talking about going back to the basics and the art of the pullback. Now, in terms of the markets these days, recently we've seen lots of volatility, lots of one-way moves in the markets. Whether you look at the currencies or you look at the equities markets in particular, or the commodities markets, you're seeing lots of trending moves, lots of volatility, and arguably, when these types of market conditions occur, we're going to be using trend-following techniques as I usually do. And in terms of that, I'm generally looking for breakout moves, and within the trend, I'm looking for pullbacks. So today we're going to go back to the basics, and we're going to be talking about the art of the pullback, which is essentially my primary strategy for trading most markets. So what I'm going to be talking about, I'm going to go through the currencies. I have a lot of charts actually on different currency pairs, as well as equities markets, as well as commodities, but I'm going to be focusing on the currencies because this is FX Street. So we're going to be talking about all of that. I'll show you my charts, tell you what I'm looking at, show you any opportunities that I may see, as well as giving you a broad introduction to how I'm looking at the markets from on a daily basis from a primary basic perspective. So let's move forward with that, and if you have any questions, please feel free to ask them. Okay, first of all, just a quick disclaimer: financial trading carries a high level of risk to your capital with the possibility of losing more than your initial investment and may not be suitable for all investors. Ensure that you fully understand involved and seek investment advice if necessary. Okay, and let's move forward real quick. Just very quickly about me. Again, I'm the Chief Technical Strategist at CITYINDEX Group, which means that I trade, I analyze, and I educate using primarily technical analysis. Although I also use a lot of fundamentals, and lately a lot of fundamentals have been moving the markets, as we'll see in a second, but essentially, from a day-to-day basis, when I'm looking at the markets and trading the markets, I'm going to be using a technical analysis perspective. I'm a Trading Academy mentor, which is basically, it was a competition that we ran, and we should be doing some more in the near future in London, where we pitted several different new traders against each other. We mentored them, and we came out with a winner who won £100,000. So that was a fun thing to do, and perhaps to do that in the future as well. I've been trading the markets for many, many years. I'm a chartered market technician. You could see my analysis in many different places, as well as my appearances on TV, as well as in different print publications, etc. And I'm the author of 2 books, Essentials of Foreign Exchange Trading and Essentials of Technical Analysis for Financial Markets. As well as with FX Street, back in 2010, we did a DVD set called High Probability Trend Following in the forex market. Okay, so that's enough about me. Let's move forward real quick. So we're going to go back to the basics, the art of the pullback. Oftentimes, I talk about different strategies, some of which are a little bit complicated, some a little bit convoluted. But when you're faced with markets that move, very quickly and in one direction, what you'll probably want to look at is ways to trade it from a basic perspective, using your main tools of technical analysis, which includes very, very simply the trend and support and resistance. So we're going to be taking a look at charts today. Boyke, good to see you. Hi, where do you publish daily? On cityindex.co.uk. Okay, so you can take a look at cityindex.co.uk. I work for CITYINDEX, and that's where my market analysis resides, as well as several different other analysts on there. Okay, so let's talk about pullbacks. Very simply, I know some of you who've been here a long time, like you, Boyke, you've seen this before, but I'm going to go through this, and then I'm going to very quickly, and then I'm going to go through my entries and exits, and then the tools that I use, and then I'm going to show you my charts and see how it plays out. Okay, so hopefully you could see my charts. Right now I'm on the not my charts, my PowerPoint presentation. Right now I'm on market principal trade trend pullback breakout, so hopefully you could all see that. Basically, this is, especially in strongly trending markets like we're seeing right now, or at least recently we've been seeing. We're seeing some consolidation right now on the currency pairs, but, very recently we've seen some strong moves. You take a look at the euro dollar, you take a look at pound dollar, dollar yen even, which prior to the big move to the upside was pretty much doing nothing for quite some time. You take a look at Aussie dollar, you take a look at gold, and and the indices, the equity indices. You see that lately we've been seeing lots of strong trending moves, and especially during these moves, you want to be able to trade from a momentum perspective, or at least I want to trade from a momentum perspective. And for that, I'm looking to trade the trend. A lot of people ask me, when you talk about trading breakouts, are you simply going to be, if let's say the dollar yen hits a new high at 110, which it did recently, are you looking to buy the market, if it breaks out above there? Now, probably not. Okay, I'm going to be looking more for within that trend. I'm going to be looking for pullbacks within the trend. So we see this occurring, on the major currency pairs, including euro dollar, including dollar yen, including pound dollar. We're looking at strong trends, and we're looking for pullbacks within those trends. So again, I'm not necessarily going to, if the dollar yen hits a 6-year high at 110, am I looking to buy that market at that point? No, I'm not. Instead, what I'm going to be looking for, not necessarily in the case of dollar yen, but in many other cases, I'm going to be looking for first the trend, which we've got in many different markets. I'm going to be looking for a pullback, and then I'm going to be looking for a breakout. Boyke, so you don't trade ranging markets? Yes, I do trade ranging markets, but what I'm mostly looking for are those markets that are strongly trending, because those for me represent the best potential trading opportunities. Ranging markets, they're fine, and we've seen ranges in the past that have been good for trading, but more often than not, I find the best opportunities are in the strongly trending markets, and you can find those all over the place. At this point. And even when a lot of markets are ranging, there's always places or markets that you could find that are trending that you could take advantage of. So if there's a certain currency pair, for example, the dollar yen, that was prior to the big move to the upside and then the subsequent move to the downside, prior to that it was range trading for quite some time. If you heard me talking about the dollar yen back then when it was ranging, I was saying, not a lot of opportunities there. Yeah, you could go short near resistance, and you could go long near support, but for me, it's not really worth it, because there are other opportunities to be had. Those opportunities where you see the range play in action, you could certainly try for that. But if there are other better opportunities where the markets are actually moving on a directional basis, then those, for me, represent a better potential opportunity. So why waste your time on something that represents, historically speaking, a lower probability opportunity in a ranging market, when there are plenty of ranging markets out there? And these days you got so many markets to trade. It really doesn't make sense to stick to one particular market if the opportunities are not presenting themselves. Therefore, I'm looking for this type of setup. The trend, I'm looking for a pullback within that trend, and then only if there's a breakout after the pullback will I take a trade. So we see here we got the trend, we got a pullback, and then we got the price turning back in the direction of the trend, and then I'm looking for a breakout at that point, and then I've got my stop loss down here. How do you determine, Oscar? How do you determine the breakout after pullback? I'm going to be talking about that in a minute. Okay, so here you have the entry, and then here you have the stop loss or your risk management that represents your risk in that given trade. Okay, and then you have your reward, and I'm going to talk about how to take your profits, how you could potentially take your profits. There are many ways to take your profits. There are only a couple ways to take your set your risk management. A couple of high probability, prudent ways to take your losses. But in terms of taking your profits, many ways to do that. I'm going to be touching upon those in a second. Okay. When pullback as a trend reversal? Great question, and I'm going to be showing you that in a second. I'm going to be using the tools that I have at my disposal, including such things as support and resistance levels. Okay, if I've got an uptrend, a support and resistance level is breached. Okay, a key support and resistance level that I've deemed, a potential turn of the trend or a reversal of the trend, then at that point I'm going to deem that a reversal, and then look towards going towards the opposite direction. Also, I'll use such tools as Fibonacci levels. Also, I'll use moving averages, and I'm going to show you all that in a minute. But great question there. Okay, so T.P.B, trend pullback breakout, and then here, very simple representation. I've been using this for years, so if you've seen this before, I apologize. But basically, this is an ideal representation. Of course, we're not going to see this on our charts, very frequently, but this is an ideal representation of what I mean. Trend, and I'm going to define the trend in many different ways. There's several ways to define the trend, and then I'm going to look for a pullback within that trend, and I'm going to look for a breakout point. Okay, a breakout would be a breakout. If it's an uptrend, I'm going to look for a breakout of resistance. Okay, trade entry and exit principles. One way to enter a trade is the right direction at the best possible price. This fits in very well with my philosophy of finding the trend, looking for a pullback, and then taking the breakout. So one way to enter a trade, as far as I'm concerned, and these are my general principles. I'm going to get granular in a second. I'm going to get more specific in a second. But for now, the right direction at the best possible price. The right direction is with the direction of the trend. So in the case of euro dollar, if you're looking on a longer term basis, we're looking to the downside. That would be the right direction as far as I'm concerned. Okay, the best possible price. Would it be on a new low? Probably not. Would it be on a pullback? Yes. Okay, so I'm going to be looking for the right direction at the best possible price. I'll pull back in the euro dollar to the upside. Now it's starting to go down again. We could be looking for breakdown points to the downside to trigger us to get into trades. So the right direction, at least on the euro dollar, would be to the downside. The best possible price would be after a pullback, which we've seen. Okay, we've just seen. And again, I use many tools to measure that. Okay, two ways to exit a trade. One way is at a loss. You have to be able to accept your losses, and that's where the market's telling you you're wrong. So let's say, for example, on euro dollar, we play. There's a rally in the market, like we've seen. A pullback to the upside, at least on the daily chart, on the longer term chart, we see a pullback to the upside, and then it starts going down. We play to the downside. We play a breakdown. Okay, so we're going short. Now, where's the market telling us we're wrong? Well, that would be that would simply be at right above the high of the pullback if we're trading on the daily chart. Okay, if we're trading on shorter term charts, we're looking for pullbacks on those charts. So just know that everything I talk about it's what we call fractal, which means it occurs on all time frames. So if you're on a daily chart, you're looking for pullbacks on the daily chart. If you're on a 5-minute chart, you're looking for pullbacks on the 5-minute chart. It's all pretty much the same thing. It depends on what kind of trader you are. But anyway, in terms of loss, we're going to be looking where the market tells us we're wrong, and that's simply slightly beyond the pullback. Okay. To take a profit, we want to take a profit preferably at a multiple of our defined risk. That's because we want to look for opportunities to have our overall, over the long term, we want to have our wins be larger than our losses, over the long run and on average, because let's say that most of your losses are larger than your wins. Most of your losses are larger than your profits. Then you have to have a very, very, very good strategy with an extremely high ratio in order to be consistently profitable. Now, if your profits on your winning trades are around equal to your losing trades, then you need approximately a 50-50 strategy in order to break even. If your strategy is a little bit better than that, then you can make money. Now, if your wins are larger on average than your losses, then your strategy doesn't have to be perfect in order to come out consistently profitable. So, of course, there's a lot of give and take there, and it's not so cut and dried and not so black and white. But preferably, I like to see at least my wins be as large or larger than my average losses. Okay, so that's what I mean by profits. And then in terms of profit targets, I'll talk about taking those in a second. Okay, so first of all, what is the first tool that we use, and that's the trend. You look at any chart, you see trends all over the chart. Go through my tools real quick, and then I'm going to go through the charts, the actual charts in a minute. Now, the trend, everyone knows the trend, everyone hears this, the trend is your friend. It's an overused saying. Everyone says it, especially new traders, but it really rings true. I've been trading for many, many years, and I'm looking to trade with the momentum of the market. Now, the trend is your friend, of course, until the end when it bends. Okay, I don't know who said that before, but I'm stealing that for the purpose of this presentation. But basically, yeah, you're looking for the trend. Of course, trends always end, and we saw that on euro dollar. Let's see when we saw the trend, the uptrend end in May of this year, and then we saw a subsequent downtrend. I'll tell you when I deemed it a downtrend in a minute. But that's what we see. We see that trends end, and then at that point, in times of volatility, when you're trend following, and any time really that you're trading with the trend, you have to, there are very good opportunities to trade on pullbacks. But the thing is, you need to have good risk management, because when the trend does end, and the trend will always end, but when it does, then you have to be prepared for that. Okay, you could take advantage of a trend for a long time. Let's say here on to the upside on euro dollar. Okay, hopefully you can see my charts here. To the upside on euro dollar, you had opportunities, at least on this daily chart. Okay, if you magnify it to, let's say, a 1 hour chart or a 5-minute chart or what have you, whatever you happen to trade, you'll see a much different picture. But there are trends within this trend. Okay, so this is a longer term trend, and there are many opportunities if you're trading on the daily chart to go long during this trend. But also, if you're trading on a shorter term time frame, to go short during this trend, because there were many shorter term downtrends that were counter trend on the long-term chart, but were actual strong trends on the shorter term charts. For example, right here. Okay, so but anyway, so I'm purely looking at the daily chart just for reference purposes, just for the purposes of this presentation. So we have this uptrend, many opportunities to go long, and then once it turns around, okay, many opportunities to go short. But at the same time, you got to be able to discern when's the point at which it turns. Okay, and there are many different tools and ways to see that. And at that point, then you may want to switch direction and go in a different direction if in fact the chart is telling you that. And then so at that point you could have many opportunities to go in a different direction. So as we can see here, okay, so since the high was reached, the multi-year high was reached on euro dollar in May, we saw lots of downside. Okay, lots of downside and many different opportunities to go short. I was short for a long time. I'll tell you when I was short from. And it wasn't in the very beginning, because I'm not that smart. Okay, so if you shorted from this high up here at 140 or just short of 140 on euro dollar, then you were probably the smartest trader in the world. But if you were short from there and held it all the way down, where it is now, then you did an extremely good job. But I don't really do that. It's very hard to do that on a consistent basis. Now, when did I see a potential for downside, further downside? 135. Okay, this breakdown below 135, the strong breakdown below 135. Why? I'll tell you in a minute. Okay, so let's take a look at. Okay, so the trend is basically, you could take advantage of the trend until it ends. So we're looking for net directional price moves to the upside or downside. We see that all over the charts. Okay, so basically what is trend trading? It's taking the path of least resistance. And then one way to measure a trend is by drawing trend lines. So as we can see here, we draw trend lines. We could easily, let's take a look here on here. Okay, so like for example, we have this, downtrend on pound dollar. Okay, so as you can see here, it's not a very exact science. We see some breaks to the upside. Okay, that's why we do not rely on any one tool. I talk a lot about confluence. I'm looking for different tools. Okay, so one way to frame a trend is through the use of trend lines, okay? But you could also use moving averages. You could also use Fibonacci levels, and most importantly, you could also use support and resistance levels, okay? And I'll show you that in a minute. So we have trend lines that we could use. We have moving averages. We have many different ways we could measure the trend, but essentially what's the most important aspect of this is that you know what the trend is. And you have a point at which you say this trend, or the trend to have ended, okay? And at that point, you should be looking for a different trend, okay? And that's the real trick here. So number one is a trend. Number two, support and resistance. I know you all know what support and resistance is. For those of you who don't, well, you probably do. But support is a price floor, and resistance is a price ceiling. Okay, so that's all it is. Price floor is where demand may be expected. Resistance is a price ceiling where more supply may be expected. Okay, of course, floors break and ceilings break, and that's where we're looking for potential breakout moves in the direction of the trend. Okay, so oftentimes, I mean, you're either looking for a bounce or a breakout at support and resistance. Very, very simple stuff. Okay, support and resistance. All you're looking for is a bounce or a breakout. Of course, you could have a consolidation around support and resistance where it's moving up and down. It's giving you a lot of fake signals. Yes, absolutely. But in terms of what we're doing here, trading with the momentum of the markets, I'm looking for moves that break support or resistance levels. Okay, so how do you measure support and resistance? I measure. There are many ways to measure it. Again, there most importantly are past turning points in price. Why do I use past turning points in price? Because that shows where the market as a whole deemed that either the market is too low, the price is too low, or the price is too high. Okay. Price is too low, meaning support. Price is too high, meaning resistance. If it's too low, then we're talking about demand in the market, and people are coming in to demand them to buy the market. If it's resistance, we're looking at more selling in the market. Okay, so it's relatively high. So that's why I'm looking for past turning points in price, and we can see that all over the charts. Okay, I mean, just take a look at gold. For those of you who have seen gold, hopefully you could all hear me still. But for those of you who have seen gold, let me just show that real quick. Okay, so where better does support and resistance work but right here? Okay, if you could see this right here on gold. This is a daily chart of gold. Back here in June of 2013. Back here in the very end of 2013. Okay, and then back here just a couple weeks ago in early October, we see 1180. Okay, around 1180 as a very strong support level. So for those of you who don't really believe in support resistance, look at this chart or look at the Aussie dollar chart. whatever you want to look at, you could see that support and resistance actually does work. So in terms of the market here, what is the market thinking when gold falls all the way down to 1180 and then turns on a dime and goes to the upside? Okay, yes, it's fundamentals that are driving this market, but this occurs right around the 1180 area, which tends to suggest that this is a strong demand level. Okay, at right around 1180 level, which means it's a strong support level. Okay. Okay, so significant price events tend to occur around established support and resistance levels, as I just showed you. Now, what I just showed you on gold, if those of you who bought at 1180, if you did, that was a pretty good move in hindsight. But in terms of trading with the trend, that was not a trend move. Okay, that was just a bounce off of support and resistance. But we do have lots of trend moves. So, for example, using support and resistance. So, for example, you take a look, and I show this all the time. You take a look at the euro dollar. Okay, so we see this move to the downside from that high up there. It moves down to the 135 level, which was strong support and resistance, okay, strong prior support and resistance. Then it moves to the upside to 137, okay? And if you measure this, this is also the 38% Fibonacci retracement. So we see that it's the 38% Fibonacci retracement. It's also the 37 resistance level, prior support becomes resistance. It's also where the 200-day moving average was. So that's a confluence of resistance right there. And then from there, it moves to the downside. It turns to the downside. Okay, so when I'm trading using support and resistance, usually I'm not doing it on what I just showed you, like the gold chart right here. Okay, so I'm not just looking for bottoms to buy. I'm mostly looking for what happens like on euro dollar, which where we see a pullback, and then we see a subsequent move down in the direction of the trend again. And that resistance level at 137 was a good point to show me. It's not necessarily my entry point to show me that this market has downside momentum and perhaps the start of a new trend. When was that confirmed? On a breakdown below 135 for me. Okay, yeah, it was relatively late, but you see prolonged trends in the market that you could take advantage of for quite some time. Okay, so let's move on real quick. So support and resistance levels, not just for buying at support or selling at resistance during trading ranges, but also for, and more importantly for me at least, for trading in the direction of the trend. Okay, okay, we don't have to go through that. Entry and exit zones. Okay, so this is simple support, simple resistance. Okay, now bounces and breakouts, I already went through this. I'm not necessarily looking for the bounces. Actually, if you take a look at the euro dollar chart, I'm looking for a bounce off of that resistance, but I'm also looking for breakouts. Okay, so the breakout of so it's the bounce down off the 137 and the breakdown below 135. Okay, so that's what I'm looking for. I'm looking for both a bounce and a breakout. The bounce was a signal to me that this is a down market. This is potentially the beginning of a bearish market. The breakout for me was okay. So this is a potential trigger to get into a short trade because the market seems to have turned and we seem to be in a downtrend at this point. This is very discretionary trading. Okay, so pullbacks and retracements. So all trending price moves will have pullbacks and retracements at some point. We're going to be looking for pullbacks, or at least I'm going to be looking for pullbacks as the best places to get into a market in the direction of the trend. Now, I'm not just looking for a pullback. I'm looking for a recovery of a pullback after a pullback. Okay, so we see this pullback. I know I keep using the same example, but we keep seeing this. We see this pullback from 137 down to the downside. If I got in at 137, I'd be both smart at the same time. Okay, because I'm smart because it went down after that. I'm stupid because I don't know where it's going to go. Okay, so I have no idea what happens after it hit 137. Okay, up, does it go down? I have no idea. So I would be stupid to go short there. It could be a smart move if you have strong risk management and you're taking sort of a gamble that's going to go to the downside. But for me, not really. Looking for further evidence that this is moving to the downside. If it doesn't break above 137 in any appreciable way, I'm looking towards the downside. I'm looking to go short. Okay, I'm looking to go short at that point if it moves to the downside, and then probably I could draw a trend line, a counter trend line here to play the breakout there, or I could just play the breakout below 135. Okay, if I'm trading on the daily chart. Okay, so pullbacks represent better entries. Why do they represent better entries? Well, if you just take a runaway market and you just take any breakout, then let's say you're going to the upside. You take a runaway market. Let's say you get in here and you take the breakout. Okay, so you're getting in at a relatively high price. If you wait for a pullback, then you're getting in at a relatively low price, and it's just a better entry in general. Risk also can be controlled better when entering on a pullback. Okay, so again, this is the art of the pullback. We're looking for pullbacks. We're not looking for runaway markets. Okay, a lot of traders make that mistake of getting into runaway markets, and they find they're stuck in a bad position. Okay, yes, we do want to follow the trend, but we want to wait for pullback. Okay, Fibonacci ratios. Okay, I think a lot of you are familiar with this. This is a Fibonacci ratio. This is another trend following tool, but it's also a support and resistance. I have I have the key levels for me, retracement levels 38, 50, and 62% are the retracement levels, and those for me are good potential levels. So let's say, for example, let's take a look at pound dollar. We already saw euro dollar, but let's take a look at pound dollar. So before I drew this, okay, so it hit this high and then it started its down move, okay, and it started its down move and then it continued down to here, this low right around 160.50 or so, okay, and then it pulled back to the upside. Now, did I know where this pullback was going to stop? I had no idea. Okay, so I had resistance at 163 after a breakdown. It broke out above 163, and then where does it go? But it goes around the 38% Fibonacci retracement of this high up here down to this low down here. Okay, so it hits there. Did I know that it was not going to go to the 50 or the 62% Fibonacci retracement? I had no idea. But when it starts going back down to the downside, okay. It starts going back to the downside, and then you have a clue. Okay, now you're saying, this is a trend. This is a trend. Now we're looking at a pullback to the upside, and then a subsequent pullback from that pullback. Okay, so a move back to the downside, a re-break below the 163 support level. Okay, and then a further downside move. We could be looking at a continuation of this downtrend. Okay, and which is in fact what happened. So we had this high up here down to this low down here. We measured that and we had the 38%. It's just one tool. Fibonacci's are one tool to use, okay, in conjunction with your trend lines, in conjunction with your moving averages, but mostly in conjunction with your support and resistance levels. So if you take a look here, the 38% corresponded with the 165 level, 165 level, around the 165 level on pound dollar, which was a support and resistance level prior to that. Okay, so that's an example of strong confluence there, showing the continuation of the down move in pound dollar to be used in conjunction with everything else you got, which includes the moving averages, which I'm on right now, as well as everything else you got, especially support and resistance. Okay, so moving averages, they could be good in showing the general direction of the market, as well as support and resistance levels. Okay, let's see if I have anything here to show that. I'm using the 50 and the 200. Okay, I'm using the 50 and 200, and here we see a little bit of resistance here on the 50 on the euro dollar chart. So we see some resistance here on the 50-day moving average. I'm looking to the downside on euro dollar, as I have been. If you take a look at my analysis, I'm looking for to the downside on euro dollar, as I am on pound dollar. Further downside to continue this downtrend move. We had quite a bit of upside here on this pullback to the upside, but I'm looking. This seems to be failing to me. although we're in a sort of consolidation. But I'm looking further downside. I mentioned before, at least I mentioned on my analysis, the 124.50 level and 123 prior support resistance levels. Okay, so that's moving averages. Okay, I show this a lot because this I use in conjunction with everything else, my Fibonacci levels, my support and resistance levels, trend, all that. And the most important ones I use are the hammer and the shooting star, and these show potential turning points, and they're great for me because these show they have a story behind them. They have a rationale. So a hammer, if you have a hammer turning around at a support level, this is after a pullback in an uptrend. Let's say you have a down move and then you have a hammer candle that moves down and moves all the way back up. That's rejection. If that occurs near a support level, then that's a potential turn in the currency pair and a potential move back to the upside after a pullback. Okay, so these help a lot. Same thing with shooting star. In a downtrend, have a rally or a pullback within a downtrend, okay, like we see on euro dollar and pound dollar. So if that's capped off with a shooting star, that's showing that perhaps that we're having rejection near that resistance level and perhaps turn back down to continue the downtrend in euro dollar. Okay, so hammer and shooting star, very important. Also, doji and spinning tops represent indecision in the market, potential turning points, especially when they're used after pullbacks during trends. Okay, flags and pennants. These are pullbacks defined. Okay, so you have a move to the upside, a pullback, and then a break to the upside. Okay, trend, pullback, breakout. Very simple. We see that all over the charts. We see that on euro dollar. We see that on pound dollar. We see that on Aussie dollar. Okay, as well as many different. We see that recently on the equity indices. Okay, so lots of this happening. Flags, whatever you call them, basically they're trend and then the pullback and then okay. Pennants, same thing. Triangles, same exact thing. Okay, wedges, same thing. Rectangles, same thing. They're all essentially the same thing. They're pullbacks or consolidations within a trend, and therefore we're looking to go in the direction of the trend on a potential breakout. Okay? Now, trade entry techniques. Before I get to my charts, trade entry techniques. Okay? I'm looking for a breakout criterion. Okay? I get in only on a breakout. Okay? Why do I do this? Well, this helps build a stronger case for a trade. I'm looking for breakout of a support and resistance level, and then I'm looking for a breakout above or below the last bar of that breakout bar, okay, as my trade entry technique. Okay, why am I looking to do this? I'm looking for the momentum of the market, the current momentum, short-term momentum of the market to agree with my trade, to agree with my larger rationale of going with the trend. Okay, so breakouts help to filter out trades that don't have any momentum. Okay, again, you could trade, on this euro dollar chart, you could have traded short at this high up here, but there's no momentum to the downside yet. Okay, so you could have traded here and you would have been right to trade here, but it would have just been dumb luck. Okay, probably it would have been dumb luck if you had traded short here and if you had caught that move to the downside from up here. Okay, because there is no momentum that's agreeing with you yet. It goes to the upside. Yeah, it's a 38% Fibonacci retracement. Yeah, it's at the 200-day moving average. Yeah, it's at the 137 resistance level. But there's no momentum moving in back if you're short. So, at that point, if you had gotten in there, you're either the luckiest person in the world or the smartest person in the world. You're probably the luckiest. Okay, so if a breakout occurs, short-term momentum is more likely to be in the direction of your trade, and therefore I'm looking for the breakout. Now, trade exit techniques. We place our initial stop loss above or below the most recent significant resistance or support level. So in the case of a pullback or a dip in an uptrend, we're going to be placing our stop loss or risk management under the low of that dip. Okay, we could also use the average true range or ATR. Okay, ATR is a good tool because it shows you the recent volatility of the market, and you want to be able to trade according to recent volatility or current volatility. We could use moving averages or an indicator called the parabolic SAR. We could, and this is what I often do, I trail my stops manually. Okay, once my initial profit is achieved, so I could lock in my profits. Okay, we could also place multiple trades using different profit exit levels. That's another way to lock in your profits while also locking in while also managing your risk. Okay, we could combine both trailing stops with multiple exit levels. Okay, now the key is to limit losses in losing trades and lock in profits during the course of winning trades. Oscar asks, I'm sorry if I mispronounced your name. How do you avoid fake breakouts? Yeah, that's okay. How do you avoid fake breakouts? Well, first of all, you need to have your risk management in place, and it's very difficult oftentimes to avoid these fake breakouts. That's why you want to use multiple different tools, not just support and resistance. Although support and resistance is the most important, but you also want to use other factors, including your Fibonacci levels, your chart patterns, and your trend lines and your moving averages, etc. So yes, you will definitely have fake breakouts, especially if you're playing break, obviously. But that's a part of trading. If you want to trade the bigger moves, you're going to have to put up with fake breakouts. Okay, and oftentimes give your trade a little bit more room to move in order to help minimize those fake or false breakouts, especially if you have a lot of evidence, your tools as well as the fundamentals are telling you that this is going in a certain direction. Way to try to minimize the false breakouts, but false breakouts are a part of trading. Okay. All right, so let's take a look very quickly at what I'm looking at. I already showed you a bunch of stuff. I think I actually ran out of time because I talked too much. But here on euro dollar, okay, so we have this move to the downside, very, very bearish ever since the May move from that all-time high, not all-time, the multi-year high. And then a breakdown from here, as I mentioned, was my trigger to get into a trade. Also, we have a counter trend support line here that can also be used to get into a trade. From there, we got lots of flag-like, pennant-like, flag-like or pennant-like patterns here. As we can see here, this is sort of a pennant pattern. If you term chart, even clearer, okay, and you could get in earlier and have a lot of these different patterns. So as we move forward, lots of little rests, rests, and then breakdowns, and then okay, so as we broke down below 135, my next target was 133. For many reasons here, 133 back here, and then a breakdown below 133. My target was 131. Another turning point back here, 131 was hit. Okay, it broke down swiftly below 131 after this little consolidation pattern and moved down below 131. My next target was 130, and then broke down below 130. Okay, swift breakdown below 130. After it broke down below 130, it comes back up and pulls back to the 130 level. So this is classic technical analysis right here, technical trading. So it breaks down below 130 psychological and support level, and then moves back up and then comes back up to 30 level as pulls back there. So, in terms of the technicals on the currencies, extremely good. Okay, so pulls back up there, and then it breaks down further. Once it broke down below 130, my target to the downside was 127.50. We had this double bottom low right down here. Okay, so 127.50. It pulls back to 130, and then it forms this, whatever you want to call it, pennant pattern, flag pattern, consolidation pattern, wedge pattern, whatever you want to call it. It breaks down to the downside, and then it hits my target, and it goes even further from there. Okay, 124.50 was my target. It hasn't been hit. And then it does a big reversal, not reversal, I'm sorry, a rebound move and a slight recovery. But I'm saying, as I've been talking about lately, I don't think this has legs. I'm looking to the downside. Same type of thing, strong down move. And then we saw this, we saw the breakdown below 165, which was a key signal there, and then we saw, after 165 was 163 to the downside. It hit 163. It gapped down below that. 160 was my next target to the downside. Before hitting 160, it pulls back 38% Fibonacci up here, and then it subsequently falls. I'm looking for more downside. I also don't think this rebound has much in terms of legs. I'm looking down. 159 was my key support level. It was hit. Okay, it was hit, and then 157.50 is my next target on this downtrend in euro dollar. Dollar yen is always very hard to trade, at least for me. Okay, we saw this breakout above this triangle pattern. It broke to the upside, and then it just went on a tear, a record move up to 110, which was year high, and then it pulls back all the way to the 50% Fibonacci level of this move here. I'm not sure what's going on with dollar yen. I don't often trade dollar yen. I look at it from it's a bit difficult, at least for but for a lot of people to trade. But we have some good moves here that on a shorter term basis could have been taken advantage of in terms of the pullbacks and the continuations of this up move, which occurred from August. Okay, and then Aussie dollar. Talk about support and resistance levels. In terms of the gold, I showed you gold with the triple bottom. Here's a really, really nice double bottom here. What is this pattern here right above the double bottom? This is around the 86.50, 86.60 level or so on Aussie dollar. We have a nice bottom here. This is a consolidation level. If anything, I'm going to be looking to trade this. If there's a breakdown, I'm looking to trade it lower. Okay. Some of you may be looking to trade it higher on this support move. We could see several different bottoms here. Very strong support here. But I'm looking more for a potential trend move. We have a long-term trend. We have a short-term trend. And we have a very short-term consolidation looking for further downside towards 86 and possibly lower than that. But we'll see. I mean, right now we're in consolidation. And then gold, as I showed you, triple bottom here. Very nice pattern here. If you're gonna, if anyone went long there, gold and commodities are all about supply and demand, and very strong demand here at the 1180 level. A lot of it was technical, but of course the fundamentals drove it. But looking towards 1265 as a resistance level, and then possibly further up from there. But generally speaking, we're in a long-term bear trend. But for now, many different opportunities to trade with the support and resistance levels. And I think I've run out of time today, and I think I said a little bit. I talked a little bit too much. But if any of you have any questions, please feel free to email me. You could always email me right here at my email address right here. This is james.chen@cityindex.com if you have any questions. And besides that, I look forward to seeing you guys next time. And thank you very much for your time today. Thank you.